Stop panicking about Oracle's drop. Seriously. If you saw 7 straight days of losses and thought the AI story is dead, you haven't looked at the backlog. Here is the counterintuitive truth that most retail investors are missing. Oracle has a $638 billion backlog, 363% higher than last year. That's equivalent to 8 years of revenue at current run rates. But the stock is down 44% in the last 9 months and 55% from its peak. Why? Fear. Fear that OpenAI can't pay its $300 billion plus contract. Fear that $130 billion in debt will crush the company. Fear that AI spending is a bubble. But here's the counterintuitive truth. Analysts still rate it a buy, with a $252 average target, 68% upside from current levels. Guggenheim says $400. Bernstein says $325. Let me break down the bull case and the bear case. I'll admit something. I saw Oracle drop 44% and thought, value trap. Avoid. Then I read the backlog numbers. And I realized, $638 billion in contracted revenue is a lot of revenue. Today, I'm going to break down the entire Oracle story. By the end, you will understand why this is high risk, high reward, and why analysts are split. Let's start with the damage. 52-week high from September 2025 was roughly $346. Current price is roughly $140 to $150. The decline is 44% in 9 months. 55% from the peak. The streak, 7 consecutive losing sessions. The scale, roughly $100 billion in market cap wiped out in 1 week. Why? Fear of SaaS disruption, swelling debt, OpenAI's ability to pay the $300 billion plus contract. AI infrastructure spending concerns. The counterintuitive truth. Oracle's backlog is up 363%, but the stock is down 44%. Revenue is up 21%, but the valuation is at an 18-month low. Something doesn't add up. Now let me show you the bull case. The backlog, $638 billion in remaining performance obligations. That is 8 years of revenue at current annual run rates, 363% higher than last year. $67 billion in new AI infrastructure contracts were signed in a single quarter. The customers, OpenAI with a $300 billion plus contract through Stargate. Meta with a massive AI infrastructure deal. SpaceX with xAI as a growing customer. And Nvidia is also a customer. The revenue, Q1 beat with $19.18 billion, up 20.6% year over year. EPS was $2.11 versus $1.96 expected. The valuation, P/E of roughly 24 times, below its 5-year average of 34 times. Analyst consensus, buy, average target, $252, 68% upside. High target, $400 from Guggenheim and BTIG. The counterintuitive truth, if the backlog converts, the stock could double. Now let me show you the bear case. Because it's real, debt, long-term debt hit $130 billion in fiscal 2026. Moody's warning, debt growth is outpacing earnings. Leverage approaching 4 times EBITDA. Cash flow, free cash flow turned negative in fiscal 2026. The OpenAI risk, Oracle's $638 billion backlog is driven by the $300 billion plus Stargate contract with OpenAI. Oracle's own filing warns that some customers are highly leveraged and may not pay. OpenAI's spending, OpenAI has committed well over $1 trillion in hardware and cloud infrastructure spending. If OpenAI defaults, Oracle gets stuck with billions in assets that may not be reusable. The financial strain, 2026 capex is roughly $95 billion. Raising $40 billion in new capital. Gross margins under pressure. The counterintuitive truth, Oracle's entire strategy is a bet on one customer paying up. Now let me show you what Oracle's own SEC filing says. Oracle disclosed 3 specific risks. First, construction risk. Data center costs overrun and delays due to supply chain issues, government restrictions, or third-party failures. Second, customer credit risk. Customers may not pay. They may be highly leveraged. Even with proper credit checks, defaults can happen. Third, stranded asset risk. If a customer leaves, Oracle could be left with billions in assets that cannot be released, repurposed, or transferred on acceptable terms. The Stargate connection. Oracle did not name OpenAI in the filing, but the disclosure of highly leveraged customers directly matches OpenAI's financial structure. The counterintuitive truth. Oracle is telling investors, we might lose billions if this goes wrong. And investors are listening. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The 8-year revenue, reality. $638 billion backlog equals 8 years of revenue. 363% growth year over year. If even 50% of that materializes, Oracle's revenue doubles. The risk is OpenAI default. The reward is Oracle becomes an AI infrastructure giant. Secret 2. The OpenAI dependency trap. $300 billion of the backlog is from one customer. Oracle is betting on OpenAI's success. If OpenAI wins, Oracle wins. If OpenAI loses, Oracle loses. Secret 3. The valuation mispricing opportunity. Oracle trades at roughly 24 times P/E, below its 5-year average. Analysts see 68% upside, but the market is pricing in a lot of fear. If the fear is overblown, the stock is a steal. If the fear is justified, more downside ahead. So what should you actually do with this information? If you are a long-term investor, Oracle is HIGH risk, HIGH reward play. The backlog is massive. The debt is massive. If OpenAI succeeds, $250 plus is likely. If OpenAI fails, $100 is possible. Accumulate in tranches. Average in. Don't go all in. If you are a trader, volatility is extreme. The 7-day losing streak is a positioning reset. Watch for a reversal. The $134 level has acted as support. If the stock breaks support, more downside. If it holds, reversal potential. If you are skeptical, wait for fiscal Q1 2027 earnings in September 2026. Watch for backlog conversion. Watch for OpenAI updates. If backlog continues to grow, the thesis is intact. If it shrinks, bail. Here is my question for you. Do you think Oracle is a bargain at $140 or is the OpenAI risk too big to ignore? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on AI infrastructure stocks before the crowd finds them. I'll see you in the next video.